Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Parmar.
We'll be talking about cryptos again today because cryptos have been very volatile. While I'm recording this, Bitcoin went from, in a matter of a week, Bitcoin went from 42,000 to 38 to 34, back to 38, and today on January 27th, it's back to 36,000, right? So it's been very volatile, a lot of news happening, and we'll talk about a couple of things. And this is not about the news, but a couple of things I want to talk about is what will happen if Russia bans Bitcoin or cryptos, and also how you can come out ahead if you just focus on the long-term picture, the larger picture that you are in it for long-term. You continue to do DCA, dollar cost averaging. So those are the couple of things I'm going to talk about. We have been seeing cryptos have been volatile, but not only that, they have been controversial. And what I mean by that is that one government will say they want to ban, one government will say they'll accept, the third government will come out and say they want to regulate. So there'll always be something happening in this industry, right? Because it's new, it's in infancy. So we are going to continue to see a lot of news, lots of controversies regarding, even if you don't remember, it's about also energy usage of Bitcoin network, right? Because it's proof of work, POW. It uses the machines which are interconnected like a peer-to-peer network, and that's how Bitcoin network operates. Ethereum is also on POW or proof of work, but it's moving to proof of stake as of Ethereum 2.0. By the way, if you guys are not aware, it won't be called ETH 2.0 anymore. I think they are changing the name to Consensus Network, but we'll see what happens with that. So if you remember the last year, Bitcoin went to 65,000, back down to 29,000, and then again back to 65. In between, what happened when it went from 65 to 29,000? The biggest story was China's crackdown on its own mining industry. So in May of 2021, China was home to over 70% of the Bitcoin mining production. 70%, right? This is the worldwide hash rate. That's why some of the investors like Peter Thiel call Bitcoin as China's currency, right? But later that month, something miraculous happened, which has been really good for, at least for US investors, and I'm pretty sure a lot of worldwide investors, that later that month, local Chinese governments started forcing miners to shut down. Overnight, miners faced orders to demolish their buildings and machines. Many Chinese provinces had even set up hotlines for citizens to inform the government of illegal mining operations. In the span of 2 months, China's share of the global hash rate, the term used to describe the collective computing power of Bitcoin miners, fell to close to 0%. Can you believe, from 70% of the hash rate to close to 0%? What happened because of that? The Bitcoin fell about over 60% to as low as I mentioned, 29,000. But luckily, pain was short-lived, right? Then the hash rate again started going back up, and a lot of the hash rate moved into US, #1 country right now. Most of the Bitcoin miners are located here. Not most, a lot of the Bitcoin miners are located here. Second place was taken by Kazakhstan, and third place was taken by Russia. And not only I read about all this, but as you guys know, we have a Bitcoin mining operation. We have launched Fund 1, 2, and 3, and we are going through Fund 4 right now. So we really are into this. We really follow the news as well as what's happening, and we want to know before all this happens, right? So we are pretty much in the weeds with large corporations like Compute North to Elite Mining, etc. So now let's talk about Russia. Is right now the third largest Bitcoin mining hub in the world, with around 13% of the hash rate as of last year. Last week, the Russian central bank released a report claiming criminals were using cryptos for illicit activities. Yeah, I highly doubt this is true, but these countries, of course, like to enforce. They want to see what is going on, and cryptos, they don't have a lot of they do have ways to see, but they don't want to waste time, right? So they think that cryptos pose a risk to their country's financial stability. So now they're proposing a blanket ban on cryptos and crypto mining. Since that report, Bitcoin has tumbled like 10%. So Russia is not the only country considering action against Bitcoin mining in 2022. Rising fuel and electricity costs led to protests that rocked Kazakhstan. In response, the government's first move was to cut off Bitcoin miners from its electricity supply. Actually, when I read today, even till January 31st, they have cut off electricity supply to all the Bitcoin miners. So remember, but Kazakhstan is not China. That it is surprising that it was the second largest mining hub in the world before the shutdown. They were home to over 20% of the total Bitcoin mining computing power. Then there is Iran, the seventh largest Bitcoin mining hub. In late December 2021, they instituted a mining ban until March, blaming the industry for winter blackouts. Kosovo, while not as large a player in Bitcoin mining, also began the year by instituting a Bitcoin mining ban of its own. Remember now, let's talk when China banned Bitcoin mining, the ripple effect was clear. The global hash rate fell 70%. That means also the Bitcoin miners had to sell their either machinery or they had to relocate. So they had to sell Bitcoins and Bitcoin price continued to drop. But remember, these people, the Bitcoin miners, are resilient. They are able to find ways to keep their machines up and running after each new ban. So the more resilient the miners are, the stronger Bitcoin's network and creation process becomes. So now the interesting thing, what happened? Which country benefited the most from China's ban? Bitcoin miners worldwide have been racing to set up a shop in just one country, and that's America, that's US of A. As of fall of 2021, 43% of Bitcoin mining power was in the US compared with just 5% about a year earlier. And as you know, Marathon Digital, Riot Blockchain, there are so many blockchain companies on the mining companies as well as companies like us. We continue to invest more and more into Bitcoin mining, and we prefer to stay in US because of the jurisdiction. We are also located here. We prefer US is more resilient overall than all these other countries. Though I think Bitcoin mining is here to stay, and US is going to be a power in the Bitcoin mining world. And there are legislators like Texas, Wyoming, Kentucky, and Georgia. They are actively courting Bitcoin miners to set up a shop in their districts, right? Also, US has a relatively abundant amount of electricity and steadily growing renewable energy sources, the latter of which generally offers electricity at a lower price. So I think US will continue to dominate, as well as US will continue to benefit from all these mining bans and whatnot. And that is why, even though the Fed will decide to start maybe regulate crypto, I think Bitcoin mining is here to stay, as well as Bitcoin is. If you're mining Bitcoin or other cryptocurrencies, nothing to worry about. We are going to see these ups and downs, but stay on course. Now, I wanted to talk about dollar cost averaging, DCA, when the market has been volatile. A lot of people were asking me, should they buy Bitcoin when it was 50,000, even at 60,000? Now is your time. Now is your time. Go jump in. You do not have to buy one Bitcoin. You can start with 0.1 at 38,000, 0.1 at 36,000, 0.1 at 34,000. And again, if it goes to 40,000, buy 0.1. Just figure out your strategy. And that's what I want to talk about. And that is called DCA, dollar cost averaging. So financial markets can be crazy at times, right? The complexity of an economy makes it nearly impossible to predict what will happen in the short and long term. And none of us have a crystal ball. If you talk to fundamentalists, they will say that Bitcoin will go from here to there. Technical or the people who study charts, they will say, oh, Bitcoin will go from here to there, and maybe it will go. But none of them understand, or none of them have a crystal ball. None of them can predict with a surety. And if they do, I think most of them or all of them should be a multimillionaire in a year or 2 years or maybe 5 years, because Bitcoin on the stock market has been crazy, right? If you exactly knew that it's going to go up from 20,000 to 65,000, you would buy 10 of those, sell at 65, then wait for it to drop to 30,000, buy again, sell at 60 or whatever, 64. So I highly doubt, none of us know, and I'm not claiming to be an expert or guru. I just like the asset. I understand blockchain as a technology is here to stay. Cryptos have future. So I just look at, find the diamond in the rough and then invest and try to do dollar cost averaging, right? So let's understand Bitcoin, right? On at least 6 occasions last year, the digital asset fell in price more than 20%, just in last year. There was a 50% drawdown in approximately 3 months, right? Which was the fourth time in 4 years Bitcoin had fallen by 50% or more. To say that Bitcoin's US dollar exchange price is volatile would be an understatement. So this volatility in price is mirrored by wild swing in investor sentiment in the market, right? So I was looking at fear and greed index, and you can search for it on Google. The fear and greed index registered an extreme greed in January of 2021 when Bitcoin crossed 38,000, right? So went from 20,000 to 38,000 in a span of 3 to 4 weeks. Now, the same fear and greed index registered extreme fear because in January of 2022, Bitcoin crossed below 38,000. So see the difference. In a year, the same price point was a fear greed, and now it turned into extreme greed. Now it turned into extreme fear at the same price level. So this is how Bitcoins and a lot of the volatile assets play, right? The Federal Reserve had spent last 2 years flooding the market with cheap capital, free money, which pushed investors further out on the risk curve, right? So this is why stock market, real estate, Bitcoin, cryptos, they all were going up, right? Public companies even started to put Bitcoin on their balance sheet because they were getting cheap capital. And the price of Bitcoin pushed higher and higher as inflation continued to go up. Now that Federal Reserve is taking a tough game, including increasing interest rates and tapering quantitative easing, right? The price of Bitcoin and other risky assets have fallen significantly. The anticipation of more expensive capital and ultimately lower inflation growth year over year has investors scrambling to gain more exposure to value investments. And this is what happens, right? This is why Bitcoin then started going down. So, and as you know, different countries have been following Bitcoin differently. And I've spoken about it earlier as well: China, Russia, Kazakhstan, the US. And if you look at the other side, El Salvador has leapt onto the global stage by embracing Bitcoin in a major way. They are buying Bitcoin. They just bought Bitcoin at the dip by building Bitcoin ATM networks, launching Bitcoin software products, creating a Bitcoin city, and raising capital through a Bitcoin-backed municipal bond. So as you can see how different they are, right? So, and this is why you are going to see more and more volatility. Now, as I said, no one knows what is going to happen. It is easy to be fearful right now. It is easy to get distracted. The world is moving fast. How can you possibly keep up? Well, maybe you don't have to try. The beauty of taking a long-term approach to investing is that you can live a less stressful life. You are able to do the work to identify secular, multi-decade trends and allocate capital accordingly. Bearing some significant invalidation of the thesis, a long-term investor can then focus on dollar cost averaging into the investment over time. When you're dollar cost averaging, it is impossible to know whether you are buying the top or bottom. But if you have a long-term view, you don't care. Like I don't, when people keep pinging me that, oh, it's 65,000, are you selling? I'm like, I know, I'm not. it's 30,000. Are you selling or buying? Yeah, I'm buying a little bit, but I'm again watching. I want to see the market, so I continue to. And then from 30,000, when it moved to 33,000, I could tell that now it's moving up. I'm going to kind of buy now, right? So if you believe in it, you simply continue to convert your currency into the asset of your choice. Regardless of what is happening in the world, a long-term Bitcoin investor will continue to simple dollar cost average. Geopolitics, noise. Federal decisions, noise. Wall Street adoption, noise. Sentiment, noise. Price up and down, noise. Forget about all that. The key to generating outsized returns over decades is to ignore the noise. Focus is superpower. You lead a less stressful life. You don't get distracted. As Warren Buffett once said, our favorite holding period is, listen to this, our favorite holding period is forever. So many investors in modern markets could benefit from understanding this advantage. Hope each of you have a great day and continue to invest in Bitcoin, crypto, and let me know what you guys think of my podcast. Please feel free to like and subscribe and leave me a comment. Thank you.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing!